Hello, and good morning. It is Friday, August 19th, 2022, and I'm Kenny Polcari, your host of the party. And what is it that you need to know? What happened yesterday? What's happening today as we wind down the week, right? So the macro data continues to be mixed, yet housing is under continued pressure, and nobody should be surprised with that. Treasury yields are down, and the curve remains inverted. Oil is up 6% in 1 week. Lower prices driving demand. 4, not 1, not 2, but 4 Fed members opine on the next Fed move. But is it all smoke and mirrors? We'll get to that. And what are we having for dinner? We're going to have the pan-seared halibut and a butter lemon caper sauce. Simple, yet delicious. So initial jobless claims come in at 250,000, a little bit better. Continuing claims of 1.4 million, a little bit better. Philly Fed, 6.2, much better than the expectation, which surprised a lot of people. But the outlook remains cloudy, and existing home sales plunged by 6%, continuing to fall under the stress of higher interest rates and fears of a coming recession. Stocks continued to struggle for direction, swinging between gains and losses all day, while not moving dramatically in either direction after the latest surge up that we've seen over the last couple of weeks. Trading volumes declined by 20%. That's no surprise. It's the end of August. We discussed that. And earnings and macro data failed to push the markets higher at the moment. Over the last 6 weeks, investors have piled into stocks, dismissing the risk that the Fed's going to remain aggressive. Many now convinced that inflation has peaked and that what's going to allow the Fed to pivot, which I think is a mistake. Global equity funds have seen an increase of over $9 billion over the last 2 weeks on what I think is a FOMO trade, right? For all those investors who try to pick the tops and the bottoms rather than staying in and riding the waves, right? They try to be, bottom, they try to sell at the top, buy at the bottom, sell at that. How's that work? It doesn't really work out. By the end of the day, the Dow added 20 points. The S&P gained 10, the NASDAQ added 28. Russell up 14, transports adding 120 points. Treasury prices rose, sending yields lower, leaving all three, the 2s, the 5s, and the 10s, in an ongoing, completely inverted and upside down state, continuing to suggest that there are going to be tougher times ahead. And we've talked about that, right? Wednesday, we got the Fed minutes, and we found that they have no intention of backing down. And that somehow continues to cause confusion, and I'm not sure why. They've said they have no intention of backing down. So why would anyone think that the next move is going to be a 50 basis point move versus the 75 that's expected? To confirm that, we heard from not one, but 4 different Fed presidents, right? Started with St. Louis Fed President Jimmy B., who is a voting member. He told the Wall Street Journal that he favors a 75 base point move in September, saying, why would you want to drag out interest rate increases into next year, suggesting he wants to get there sooner rather than later. And then Kansas City Fed President Esther George, another voting member, telling us, do not be wooed by what appears to be the slowing CPI. Last month's decline was hardly earth-shattering, suggesting that she also favors a 75 basis point hike. And then we had Neely Kashkari, Minneapolis Fed president, who's not a voting member, reiterating his hold his feet to the fire mantra, further supporting an aggressive hike, saying we must douse the fire and remain focused, while San Fran's Mary Daly, also a non-voting member, said the Fed is in no hurry to reverse course this year or next year, suggesting that rates are expected to continue to rise for the balance of 2022 and into 2023. Right? Balance this against what the traders want, and you have a diversity of thought. Fed fund futures, right? Trader types have 100% bet that the Fed's going to only raise by 50 basis points in September, while the rest of us are betting that the Fed's going to raise it by 75. So the question is, will the Fed stand up and do what's right, or will they cave to the traders, fearful of the temper tantrum that the traders will throw if they don't get what they want? Expect lots of back and forth over the next 5 weeks as this is debated and debated again and debated yet again. In any event, we're going to get the PCE deflator next week, and that's the Fed's favorite inflation gauge, and that's expected to show a month-over-month increase of 0.3% and a year-over-year read of 4.8%. which is in line with the expectations. Another round of CPI and PPI are due in 3 weeks, right? September 13th and 14th, and the jury is still out. Estimates haven't been posted yet because the month isn't over. So slow down because it's coming, right? In any event, I say, and you know this, let it rip. Raise them by 75 basis points and then see what happens. My guess is that if the PCE and the CPI and PPI show any further signs of cooling, then that's going to give the Fed cover. And I bet that they cave, which is a mistake. So this will be interesting to see how it plays out. Remember, midterms are only weeks away. And the Democrats need to take the focus off of the massive tax spend and auditing bill that they just passed. They need to point to how this new bill, known as the Inflation Reduction Bill, is starting to work wonders already. It's amazing, no? I mean, it's unbelievable. Oil has risen, and yesterday it rose by $2.40 or 2.7% to end the day at $90.50 a barrel, up 6% since last week, right, when it traded as low as 85.73. The rally, a direct result of the optimism around improving demand for crude oil. So I guess the demand destruction story is out of favor, at least for now. And the idea now is that the Saudis have had enough of declining prices, down 24% off the June highs. The new Secretary General for OPEC telling Reuters that OPEC Plus could cut production or increase production at the September meeting, which leads me to ask, that's like saying stocks could go up and they could go down. I mean, it's useless and it's vague, which is exactly what they want. This morning, oil traders are taking some profits, sending it down $1 to 89.50 as the media reignites the recession fear story. Gold continues to come under some pressure, ending the day yesterday down $3.70 to $17.73. The main headwind being the continued dollar strength, which is being fed by the idea that the Fed will remain aggressive, right? Which is now confusing. Raising rates and giving the dollar another boost, right? The dollar is up 40 cents at 107.88. Earlier in the week, I said that if gold did not take back $1,800 an ounce, then we could see it test $17.70, and that's just what we've seen. Expect the lack of clarity, right, this continued confusion, to cause gold to thrash around. This morning, gold is down another $3 as the debate continues about what the Fed will do. And the more pressure that gold is under will continue to suggest that the Fed will move by 75 basis points and not by 50. U.S. futures are down this morning. Dow is down 200. The S&P is down 35. NASDAQ off 130. The Russell down 20. The algo's reacting to the chorus of Fed members calling for a more aggressive Fed. And this will be the game over the next 5 weeks. Will they or won't they? It reminds you of that vintage 1957 Clairol commercial for anyone who remembers, who was around then. Does she or doesn't she? Only her hairdresser knows for sure. And in this case, will they or won't they? Only the Fed knows for sure. Today is also the monthly option expiry. And it's estimated that we're going to see about $1 trillion worth of options activity. And while it's dramatic, it says nothing about where the market is headed. All it says is that volumes will surge not because of a change in psyche, but only because of the expiration of the contracts. There is no economic data today, so the action is going to be driven by the ongoing Fed speculation and discussion over all the latest data points, right? In Europe, stocks are down. Investors there trying to decipher what's next. UK retail sales and German producer prices are on the docket for today. Rising inflationary pressures are causing the Bank of England and the European Central Bank to remain vigilant. Think hawkish, think higher rates. At 6:30, all markets across the Eurozone are off between 0.5% and about 1%. The S&P ended the day at 42.83, up $10 on the day, but that's down from the high we tested on Monday at 43.25, where we kissed resistance and then backed off, right? This morning, futures are lower. Real support won't be found until we get to the trend line of 4,100. Not a level I'm suggesting we're going to get to today, but a level that I do believe we're going to test over the coming weeks. In any event, I think we're in for more chop in the weeks ahead. September and October tend to be volatile months, seasonally volatile. And it's the final 2 weeks of August, and they tend to have lower volumes, causing exaggerated moves in either direction. We remain in the very wide trading range, 4,100 on the downside, 43.25 to the upside. So we remain in that range, and I suspect it will stay in that range at least until we get more clarity. So what are we having for dinner tonight? We're having the pan-seared halibut with the lemon butter caper sauce. So the lemon butter caper sauce is an easy sauce to make. You can use it with a bunch of different types of fish. You can use it with branzino. Halibut, it's always good like with a whitefish, right? So for this, you need 1 pound of fresh halibut, skinned and cut into 2 equal portions. You need half a stick of butter, olive oil, kosher salt, pepper, 3 to 4 slices of Meyer lemons, 2 teaspoons of fresh garlic, finely chopped, a 1/4 cup of white wine. You know what I like, Pinot Grigio Santa Margherita, 2 tablespoons of fresh lemon juice, capers drained, and 2 tablespoons of fresh parsley that you've chopped, right? Now take the fish. You want to salt the top of the fish with kosher sea salt and black pepper. Now you want to take like a 1/4 of the stick of butter and put it in a pan, right? And with a splash of olive oil, put it on medium heat in the skillet or the saute pan and heat it up till it gets medium high. Swirl the butter and the oil around, and once it starts to slightly brown, then you're going to add the fish, the top side down, right? The side that you salted, put that down. Then sprinkle the side facing up with the rest of the salt and the pepper. Cook for 5 minutes on the one side and then flip it. Now, add the lemon slices to the pan when you flip it as the fish cooks, and then cook the fish for another 3 to 5 minutes, right? You want to stop the cooking just before it's fully cooked, because it's going to continue to cook outside the pan, and we're going to put it back in the pan anyway for quickly at the end. Now take the fish out, place it on a platter along with the cooked lemon slices. Take it all out, just put it on the side and keep it there for a minute. Now go back to the pan, add the garlic, cook that for a minute, add the wine, cook that till it evaporates, right? Let it evaporate. Then add the fresh lemon juice, the capers, and the parsley. Cook for another minute, remove it from the heat, stir in the other quarter of butter. Stir it in until the butter melts, right? Makes a sauce. Then put the fish back into the pan. Cook it for another, 30 seconds to a minute. Just flip it on both sides so it gets nice and, covered with the sauce. Then serve each portion with the cooked lemon slice and some of the pan sauce on it. You can serve this with a side of steamed French cut green beans and a mixed green salad. Works really well with this dish. So it's not too complicated. It's simple. It's clean. It's nice to eat. It tastes delicious. Light some candles. Put on some soft music and pull out the rest of the white wine that you used to cook with it. You got it all down. It'll be perfect. In any event, it's a Friday morning. The weekend is here. It's going to be another gorgeous weekend in Florida. I know right now it's a little bit humid out, but that's going to change as we move into the end of August and into September. In any event, take good care. I'll see you on Monday.